Hello, everyone. Welcome to the Pro Trade Room Plus, ISM Manufacturing. Hang on one second, folks. I forgot about something. Hold on. Sorry. Chantal, have you started streaming? Okay. Okay, good. I got it. Welcome, everyone, to the Pro Trade Room Plus, ISM Manufacturing. My name is Lee Goldstein, the Trading Director for 10-Minute Trades. Please remember that all the trades we discuss are for educational purposes, so trade carefully, please. Okay, good morning, everyone. And I just wanted to show everybody the news elements that we have going on today. There's quite a bit of news, but don't let it throw you. There's multiple events. Now, the Bank of Canada, honestly, is not a safe trade at the current time. So I don't recommend trading the Bank of Canada. So why is it not safe? If you look at what happened in June, it moved over 150 ticks and exploded us out of the trap trade. And it did an instant reversal also. So you think to yourself, well, that's guaranteed a fantastic breakout trade, but it's probably a poor liquidity burst, and you could wind up not making money on a breakout, even if it goes 100 ticks. So the big issue with Canada is 1 month it's 100 ticks, 1 month there's no fill. It's been so inconsistent that when we looked at what kind of setup we could come up with, honestly, the only setup is no setup, because you don't want to take the risk of trading it unless you don't mind taking a very large amount of risk. Now, honestly, Canada's $5 a tick. Um, you're not talking thousands of dollars of losses, but you're talking a report that doesn't follow the rules, in that it doesn't give you the opportunity for good profits. It gives you the opportunity for extra risk. So that's a report you just have to take it off for a while. It doesn't make sense to trade it. So we don't recommend trading the Bank of Canada today. I mean, you want to know the truth? In all honesty, it's probably going to have a normal move. It's probably not going to be 150 ticks, and it's probably going to be okay with a trap trade of 30 and 50, or, looking at the DMM, it's probably going to be tradable in some form. Let me show you. Personally, I think that you will not get a fill if you trade it this way today. That's what I think. Because you'd be thinking of trading it with a tier of 60 and a tier of 80 with a stop of 55. I don't think it's going to move that much. All right. So, but what I think means nothing. It doesn't mean anything. All you know is that If you traded it this way, your outer tier is 80 ticks, your stop is 55 to 135 ticks. So if the move is more than 135 ticks, you'll get stopped out right away. If the move is more than 60, but less than 135, then you'll get a fill. Okay. Personally, if I were trading it today, I would probably be looking at a smaller setup because I think that June was an anomaly. I think that June was an anomaly. That 152 tick move. Let me show you something. I just, it's worthwhile to cover this. I think the reality is this. Here's the reality. It's an unknown what kind of move you're going to get with this particular event right now. So the best thing to do is just take the report off. Okay. Take a break from it. It's got too much risk. So let's leave the Bank of Canada at that, because I think that's what makes sense. They're probably not going to raise rates. It's probably not going to be all that big of a move. But that's not the right way to trade. Probably this, probably that. You have to look at the testing. And when you look at the testing is for an unsafe, inconsistent event. So if it was my money and I was trading my retirement account, I would not trade the report today. It's just that simple. Okay? So that's what you have to look at. ISM has been trading well. A couple of things you have to keep in mind about ISM. And one of the things you have to keep in mind is that it's been getting some help from other reports over the past couple of months. It's been getting some help from jolts. So it didn't trade by itself the last month. So you just want to remember that. Last month it was with jolts. I did some testing when it trades by itself, and ISM overall is a good report to trade. And I'm going to trade it with gold. We have traded it with bonds also. Now, what I was going to say is I kind of did want to watch Canada, but ISM has a couple of different setups. So it's hard to put all the charts on the screen at the same time. So I'll trade gold. I'll watch Canada on the right. So you could see that the currencies are still in September. That's not a good chart to trade, 6C1223, right? Okay. So you can use ZF on this report. I do think that, we have been seeing bonds not trading as good as they had been. So I definitely prefer gold on this report right now. Our testing on bonds were okay. They were okay. You could use a bracket of 6 and a stop of 12 on bonds, bracket of 6, stop at 12. And ZF is definitely tradable. Let me show the DMM. Now, our DMM is definitely goofed up today. It's not services, it's manufacturing today. Okay, it's not services. And I do believe that these are the moves from manufacturing. All right. I am going to use a slightly bigger bracket. Slightly bigger bracket. The report is trading well. Okay. The report is trading well. And this is a reasonable bond setup. It's a reasonable bond setup. Okay. ZN, ZB, ZF. ZN, ZB, ZF. I might go for a tiny bit smaller target, you know, maybe 5 or 6, but only by a tick or two. But the setup is fine. Bracket of 6, activate at 58. Targets of, I might use 6 and 15. Stop of, I think a stop of 10 is okay. Between 10 and 12 on ZF is not that big a difference, so go with the 12. On the gold setup, I'm going to do something I tried to do last week on a different report. Let me explain what I'm going to do. I want to try and maximum extra profit using just 2 contracts. You know, in other words, instead of adding an extra contract and adding all that extra risk that comes along with an extra contract, let me show you another way to do it. To possibly get a bigger target, a bigger profit, but it's got to be a report that has the potential to have a good move. If it's a report that month after month after month that doesn't have a big move, then it's not going to work. The setup that you do, it's not going to damage anything or add so much extra risk that you shouldn't do it, but it just won't do what you want it to do. So here's what I'm interested in trying. I'm going to use a target of 8 and 35. Okay, now 35, probably a bigger target than what this report calls for. Oh, because you got to remember, I'm going to use a 10 bracket. All right, a 10 bracket, target of 8, and a target of 35. So you got to not forget about the bracket. You have to go 10 ticks before you get any profit. So to get 35 ticks, you need 45 ticks, plus any slippage. There could be 6, 7, 8 ticks of slippage, 5 ticks of slippage is possible. But if the market moves 25 ticks, I want to protect about 15 ticks of profit. Okay? I want to protect 19 ticks of profit. So that's the approach I want to take, because, you know, there could be a 22 tick, 30 tick move. If that happens, then I don't have to try and move my stop if everything's happening fast. It'll do it for me. If there's no move, nothing will happen. So it's okay. You could just trade the way you would normally trade it. If the move isn't that big, it won't try to move the stop, okay? There is a news report right now, a small little report at 9:45, and you can see that it pushed gold a little bit. It's called final manufacturing. It's a little bit negative than what they were expecting. That's what's causing gold to move right now. And we haven't really looked at those 9:45 reports to trade them in a very long time because they just haven't moved enough and or been consistent. Okay, but that's why the market's moving a little bit right now. So I'm going to save this ISM template, ISM manufacturing. Let me just see something here. Okay. Okay, so I'm going to check my bracket width like we always do. Okay. Bracket width gets tested. Label is there, GC breakout. You test your bracket width on SIM. Okay, that's a good spread. Then I'm going to go back and put my time back to 9:59:59. So I'm looking for a target of 8 and 38 with a stop at 20. And I'm using that feature if the market moves 25 ticks. I'm even going to, yeah, I'm going to leave it at that. If the market moves 25 ticks, I want to move my stop to plus 19. And that way, if there's a good move, I don't have to do anything. I don't have to run around trying to move my stop if there's a fast moving event. Okay. If the event is fast moving. Everybody clear? Everybody understand what I'm doing? Activating at 9:59:59, bracket of 10, stop of 20, and my targets 8 and 38. All right. And I'm moving my stop automatically. If the market moves 25 ticks, move my stop to break even plus 19. That's what that does. Now, Canada, now there's too much news to keep my news on the charts, so I'm watching the news. I'm so happy I fixed my streaming, my not my streaming, but I fixed my squawk box so I can hear the news. Again, I was having a problem with the squawk box. That's all fixed. So Canada, the Bank of Canada, Bank of Canada, Bank of Canada. In more normal times, right? If things were expected to be reasonably normal, and normal is almost, you can't even have the word. It almost doesn't mean anything because there really is no normal. But if the Canada rate statement was expected to have a relatively benign response, then I would consider using a tier of 30 and 50 with a stop of 25. That would be a reasonably normal setup if we were expecting a reasonably normal behavior. Okay. Tiers of 30 and 50, the time of the event is 10 o'clock. That's what I'm testing on the Canada trap trade. Okay. If you look at last month, let me see if my memory is good or if my memory is bad. Yeah, so last month, that was our setup. It was 30 and 50, okay, with a stop of 20. So I'm just increasing the stop to 25. And that was a setup that would be acceptable other than June would have been a problem and October would have been a problem, okay? But if we go to last month, tiers of 30 and 50, the first tier fills. Alex, that's profit. It's profit. It's not, you got it. Okay. That would be profit. In other words, it goes after the bracket is filled. So you could see last month was relatively benign on Canada. It wasn't a great move and it wasn't a great trade, but it was safe and it wasn't a big problem. Okay. Let's check our time sync. By going to the website time.is. And I want to thank everybody on YouTube. If you hit that like button and hit the notification bell, you'll get notified the next time we're going to stream. So thanks for watching us on YouTube. Today's our stream of the week. The news we're looking for, and it's no surprise that gold went and tested the high of the day before the news. That's okay. The big news we're looking for is the ISM. I'm losing my mind, okay? I am losing my mind. I must be losing my mind. I'm surprised nobody corrected me. This is ISM services, so forgive me. I don't know why I'm thinking that it's ISM manufacturing. The reports are so similar that I'm not going to make an excuse. We are ISM services, so it's perfectly okay. So our DMM is fine. What we're looking for, they are looking for decent numbers. Above 50 is decent, okay? And then on Canada, they're looking for the rate to stay the same, okay? Expecting the rate to stay the same on Canada. Last night, Australia GDP, tiny loss, like $50. Just no movement of any note trading that event. Was looking for, the possibility of a good offset and a good move, and we just didn't really get either. Just wasn't a very good moving event. All right, so just watching the markets for a couple of minutes. We still have more than 4 minutes to go. So just looking at the DMM one more time with a different light, realizing it's correct, and it's me that's incorrect, not the DMM. So last month, but the info last month, not a bad spike. I mean, I wouldn't call 38 ticks necessarily a small spike. Okay. A 59 tick spike in July, not a bad spike at all. April, huge spike. March, 38 tick. So you could see, looking for that bigger target, it's probably going to be tough to get that bigger target, the second target. But moving the stop, if we go 25 ticks or so, might be pretty reasonable, a pretty reasonable approach. Now, if the spike doesn't move the stop, then you can still think about manually moving your stop if your first target gets hit. You can still protect your profit if your first target gets hit. All right, so we have about a minute and a half till the news. ISM, it's funny, on investing.com, they never changed the name of the report. Most calendars and most organizations now call it ISM services. It used to be called ISM non-manufacturing, and now investing.com has stuck with the old nomenclature, ISM non-manufacturing. All right, we've got about 30 seconds. Just watching and waiting. Our brackets will show up a second before the news. There's our Canada brackets. Okay, now so frustrating. It didn't get to where I needed it to go. So I moved my stop to protect the target. There was a lot of slippage, folks. That's why I only made $60 because of slippage. It wiped out my loss from last night and gave me a couple of dollars. Watching Canada, the Bank of Canada having a normal response, I would probably cancel the Bank of Canada trade. If you don't get the burst in the direction, the original direction, right? Let's watch. I mean, the risk, I would, if I were trading it, I probably would cancel it, but with great hesitation, with great hesitation, with great hesitation. So let's see if I'm wrong. Now, gold, it was quite a bit of slippage, quite a bit of chop, but it absolutely made it through the first target. And I think most people should not have lost anything if not made money on that event. So let's get a roll call if you traded. Did you trade and what happened to you on the trade? And then we'll watch the video. I made a small profit. I did protect my profit by moving my stop because it did not go as far as my target, okay? Did not go as far as my second target. It's still worthwhile to try and get that move. It was a good move, but there was a lot of slippage. It's nobody's fault if there's slippage, okay? That's going to happen. It doesn't mean it doesn't mean necessarily that the way we did it was wrong. Now look, Andrew got more ticks. He got more ticks, okay? Doc had slippage, like me. Everybody could have different levels of slippage also. So Canada, like I said, was better. I would have canceled it because it was really not filling on the burst. It may still work, okay, because it just filled the second tier. There's a strong possibility it might reverse now, okay? Strong possibility it might reverse. Don't forget that your breakout trade should be unchecked, right? Disabled. The news, so the Bank of Canada left their rates the same. The ISM manufacturing was better than expected by quite a bit. Much better news than expected all across the board. That gave us the good move. Unfortunately, some of us had a bit of slippage. That's just the way it is. Okay. It looks like some people did okay with ZF. Sander canceled his ZF. And, you know, you could see that your Canada trap trade gave you an opportunity to get out with a small profit. It may do a decent reversal. It almost always does reverse this report. So if you hung in there and just let it play out, it's now starting to reverse, okay? It is starting to reverse. And it filled both tiers. It may not get quite as far as we think. So you could use the various levels. You have a high of the day, you have the PP, so you could move your fills into those areas. Also, you have the VWAP, so you could maybe move your first target around the VWAP. That might be pretty reasonable on the reversal. But Canada, you know, if you didn't cancel, didn't look like it was all that scary. You had plenty of room before it got stopped, and a small profit at the moment would be available. Okay. I think the important thing to realize is there's been a few outsized moves that, if you're willing to trade and willing to take some risk, you could set it up the way we set it up today. And, if it blows through the stop, that's the risk you take. No different than a breakout that does a whipsaw. Every type of trade has its levels of risk, okay? And it has its different types of risk. Combined my orders, you can trail your stop, and I'm just going to close it out. All right, so definitely a possibility of a profit on the Canadian trade also. So we'll keep that in mind for next month, okay? Keep it in mind for next month. Good for you, Steve. So Steve, you do take some of those slower reversals. That's good to know. I'm glad to see that. Seriously. Yeah, there's no reason not to. That's a report that we know it's going to reverse. That's why we do the trap trade. The risk is small. It's not a big risk. It's $5 a tick. It's not a big risk to take that trade. So yes, I canceled it because it didn't really burst, but you could have stayed in. You could have, if you were willing to risk, $150. And exactly, it purged the low of the day. So it's a good reversal area. All right, let's take a look at the video. I think for my ISM, it looked like I had a bit of slippage that prevented that bigger target from getting hit. I think the concept, 2 contracts with that bigger second target, we're going to be showing that that's going to be a great methodology to use more often than we've used it. It definitely is a good way to do things without adding risk. It wouldn't have changed my profit today because I'm generally going to protect my first target of profit. That's generally what I do. So here's the move on ISM. Okay, getting ready. I do want to thank everybody that watched us on YouTube. Hit that like button, folks, and thank you for joining us. So look how far down the candle I got filled. Very far down the candle.